Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, back home on the last read, the markets continued their gaining streak with the Sensex and the Nifty closing at record highs yet again. The Nifty surpassed the 11,350 mark, while the Sensex ended more than 100 points higher. Mid-caps also slightly outperformed the frontline indices, ending with around gains of around 0.4%, while the banks underperformed a tad bit as the Nifty Bank was down about 78 points. So the gaining streak clearly continues in the Indian markets, but the big question is, will it continue for a fifth straight day? And to answer that, we have Mangalam joining us to tell us how the cues are stacked up for the day. Mangalam, good morning. Over to you.
Well, good morning, guys. For the lack of a better word, the market looks aesthetically quite pleasing, to be very honest, because 4 days in a row, you see some gains. The Nifty, Sensex had a record high. Mid-caps outperformed in yesterday's trading session, not just yesterday, in fact, all of last week and on Monday as well. So slightly more broad-based. Add to that, we have new leaders emerging. In yesterday's session, it was Reliance that single-handedly took the Nifty higher. The Nifty ended higher by about 37 points. Reliance's contribution was 31 points. The previous session, it was ICICI Bank, and on Friday, it was ITC. So interesting to watch that. And what was also interesting is that the Nifty moved higher and notched a record high despite the drags that came in from HDFC Limited, Axis Bank and ICICI Bank. What is, again, aesthetically pleasing, for the lack of a better word, we are respecting the lows. On July 30th and 31st, which is Monday and Tuesday, the lows were pretty close to each other, 11,260 to 70 thereabouts. So that is something we will have to watch out for. Good results are being rewarded. We saw that in the case of Dabur, BEL, as well as Tech M yesterday. For whatever it's worth, beat on muted expectations. That stock was the top Nifty gainer, and bad results are being pummeled. So the likes of Bank of India, Indigo, as well as Idea lost in yesterday's session. FIIs and cash flows, they're patchy. They're buying on a couple of days, they're selling on a couple of days. But what you can't deny is they're purchasing in stock futures. So the last 3 trading sessions, they've added close to 2,200 crores in terms of stock futures. And also, they've written some puts that's telling you that the downside is supported. But not only are they writing puts, yesterday they bought some puts as well ahead of the big events that are today and tomorrow, the big monetary policy meets. So that is putting in a defense in place. Crude lower at around 74 should be a positive for us, and the SGX Nifty indicates a positive start. All right, Mangalam, what about stocks we're looking at in today's trading session? Well, a couple of stocks from the Nifty, Nigel, that we're looking at. Tata Motors earnings well below street estimates is what Sonia tells us. JLR reported a loss. The margins were lower as well. The stock is down about 40% this year. So let's see how that one reacts in today's trading session. Vedanta, you told us that the results are mixed, but the brokerages are positive on the stock given valuation. So JP Morgan, for instance, has an overweight rating with a target price of 400 on that. Power Grid results seem in line with what the expectations were if you compare with the poll on both the bottom line as well as the top line. Managar Gas, it looks like an all-round beat, especially as far as the volumes are concerned. Revenues were up 6%. The volumes came in at 2.87 SCMD. We were expecting about 2.74. Castrol, again, net profit growth of about 19% on the back of a revenue growth of 17% is a positive. GSFC, 56% revenue growth, 75% net profit growth goes down as a positive. Similar with the JK Paper stock. Margins expanded a little bit, revenues up 26%, and the net profit grew by about 58%. We will be watching out for a lot of earnings. No big Nifty results, but important mid-caps, non-index large caps also reporting their numbers. We have the likes of Pidilite, Exide, Apollo Tyres, and Imami. It's the 1st of August. It's a Wednesday, but we will be talking cinema. Multiplexes will be in focus. In fact, CLSA has written a note. They've cut their target price, or rather, they've cut their estimates for FY19 and FY20 on Inox and PVR. They've cut their target multiple as well. Reliance Industries, a small win for them as far as an arbitration is concerned. And finally, Gati, the CFO, has resigned with immediate effect. Interesting development out there, especially given the news reports of a takeover and thereabouts. So let's see how that one pans out too. Now all eyes will be on the Reserve Bank of India as it will announce the monetary policy decision later today. CNBC TV18 has conducted a survey amongst economists on what they expect from the RBI. Ritu Singh joins us with all those details. Ritu, over to you.
You know, in the June policy, it was a fairly unanimous decision to hike interest rates by 25 basis points. But this time around, it will be a very close call. In fact, 60% of our respondents believe that there will be 125 basis point hike, but 40% believe that the RBI could leave the repo rate unchanged at 6.25%. Well, those that have voted in favor of the hike say the fact that core inflation is much above RBI's comfort range. Also the fact that the government has announced the minimum support price, which is, a very steep hike, that could actually play a role into the Reserve Bank of India hiking rates if it sees fit. But the other, party that believes that there will be a status quo say that, the inflation reading is actually below what the street was expecting. Monsoons have been normal, and even crude prices haven't really risen since the last policy, which is why there could be a status hike. But a hike there will be in this calendar year. 90% believed, whether it comes in August or sometime later this year, there will be one rate hike by the Reserve Bank of India. In fact, we also asked our respondents if they see any changes to the statutory liquidity ratio, but 100% believe that that will be left unchanged on, in this policy. On the macro parameters, however, they were fairly confident that, the GDP forecast is likely to be left unchanged at 7.4% for this fiscal, and the CPI forecast for the first half of this year, which has been set at 4.8 to 4.9%, will also be left unchanged. But for the second half of this year, where, RBI has projected 4.7%, it's possible that there could be some marginal changes to that because of the impact of the minimum support price on inflation, how that feeds into it. We also asked them if they expect any change in the stance of, the policy, but they were fairly, in fact, 100% said that no, it'll remain neutral. There will not be any change in the stance. But the tone of the policy, that is something that many believe will be similar to the last one, or could even be hawkish, acknowledging the fact that there are risks to inflation.
Okay, so tone is something to watch out for, and it might remain neutral when it comes to the accommodative policy of RBI. But let's go across to Lata Venkatesh. Lata, tell us, what is your take on the expectations and what are the key factors that we should watch out in the policy today?
Basically, for a monetary policy, we talk about whether RBI will hike or pause, but they can do another thing. They can change the stance. At the moment, it's neutral. They can change it to withdrawal of accommodation. That can mean like, okay, hereafter I am going to hike. All cuts are over. The third thing the RBI can do is that at the moment there is enough liquidity in the system. Banks are not running to the RBI every day to borrow too much money. They can tighten the interbank liquidity so that banks are dependent on the RBI and are borrowing something like 1 lakh crore a day. That is a tight liquidity situation which pushes up rates. Now, what are the factors they will consider very quickly? The hawkish factors that RBI will worry about are core inflation. Services inflation has been rising rather sharply. It's now at 6.3%. The minimum support prices are likely to push up food inflation. The fiscal problem is very clear because GST collections are not up to mark and expenditure will normally mount in a election year, so fiscal slippage likely at center and states. Crude price is an important factor which is still kind of on the boil. And finally, the global growth situation is such that it is on an uptick, which is usually inflationary, and the domestic situation also, what you call excess capacity or output gap, is now closing. Excess capacity is not there, so if there is more demand, producers will raise prices. These are the hawkish factors. The dovish factors are basically food prices have been falling, disinflation. When food prices fall, usually there is rural distress, farmer distress, and therefore you don't want to trouble them by pushing the price of money even higher. And thirdly, the rupee is strong vis-a-vis the yen's behavior lately, and you don't want the rupee to become stronger. When you increase interest rates, the rupee will become even stronger and we won't be able to compete with a falling yen. And that may be a factor which will be on the dovish side. What might the RBI do? It's likely to either be a hawkish pause, that is, you don't cut but you sound very hawkish, or you have a dovish hike but sound very dovish, saying that I'm not going to hike anymore. That is the sense they give. The MPC and my own sympathies are that there could be a hawkish pause because there is not enough reason for two back-to-back hikes, one in June and one in August. So the RBI may choose to wait, but it is extremely unlikely that they will do everything, that they make the stance also hawkish, that they hike rates and they make liquidity tight, there isn't enough of inflationary fears to warrant all three.
Okay, all right. Thanks so much for that, Lata. Well, let's move on to some macro data now. Growth in India's 8 core sectors has accelerated to around 6.7% in June, making it the highest growth rate in the last 7 months. Of these industries, the petrol refinery witnessed the sharpest uptick in growth, rising 12% in June. That compares with around 4.9% in May. The cement sector as well continued to grow at a strong pace, clocking a 13.2% rise during the month.